Hey guys, Mike here with Rapid Quants. It's March 20th, 2022. I think it's the last day of winter, which sucks. I love winter. I know I'm weird like that. What can I say? So I came across something by accident yesterday, which really surprised me because nobody's been talking about this at all. And it's actually huge news. It's exciting news, especially for somebody with my trading background. And I guess it should be exciting news for everyone. Because, anyway, let me kind of backtrack a little bit. Yesterday I posted a video and I spoke a little bit about the market, of course, like I do, almost every week. And then I also showed you a little bit what I was doing with the IVTS hacker and everything. Right? And I'm actually going to circle back to that in a minute. And I got to thinking, right? I got thinking, man, I mean, they're a bit all nice and dandy, but it's really not. I mean, for me, for long-time options trader, I look at that market. For me, it's not. I honestly, I couldn't even figure out how to place a spread there. I mean, I looked. I tried to find tutorials, and I'm not trading actively on there a bit, so maybe I'm just being an idiot, or maybe I'm just used to. I mean, I have accounts all over the place, trading accounts, so I'm not exactly. It shouldn't be hard to figure out. Anyway, so I started thinking like, wow, what's the CME doing? What's the CWAT doing? Yeah? In terms of options, trading, because I love trading volatility. I love to trade volatility. It's been, for me, really, like a transition, right, over time. Started really way back with trend trading and systemic trading, analytical trading, quant trading, mean reversion, all kinds of stuff. I mean, I've traded almost every type of system on the planet. I haven't done stats arb. I haven't done arbitration trades. I just don't have. I guess it's not my métier. But anyway, otherwise, I've done almost every, and pair trading, and I've done basket trading. Pair trading I've experimented with, but didn't trade much of it. But you get the idea, right? I mean, I have a deep background. And so when I look at what's going on over there, they're a bit, okay, well, yeah, futures are growing rapidly on Binance and everything. But for me, it's not really a market that gets me excited. So I was just Googling yesterday. I was like, what's going on with CME? And then I find this here. So let me just read this real quick. I'm like the YouTube blogger now, reading your news articles, huh? What have I done with my life? Okay, so here we go. Let's just get through this real quick because it's really exciting news, I promise, and I'll explain you why, okay? So CME Group plans to launch micro-sized Bitcoin and Ether option. The futures options expect to start trading on March 28th, which is soon. Will come more than 2 years after the CME Group launched a Bitcoin options trading product in January 2020. Major derivatives marketplace Chicago Mercantile Exchange Group will launch options trading for its micro Bitcoin and Ether futures products. Okay, we know that much. In a Tuesday announcement, the CME Group said that subject to regulatory review, it plans to launch options contracts for its existing micro Bitcoin, and Ether futures. There will be 10% of the size of the respective tokens. The futures options expect to start trading on March 28th will come more than 2 years after the firm launched a Bitcoin options trading product in January 2020. In more than 4 years, I haven't really even experimented much with it, so I probably should. More than 4 years since the group launched the first Bitcoin futures contract in December 2017, which again, everyone was heralding the end of crypto and the end of Bitcoin back then. Of course, as usually, they were full of it, right? Building on the strength and liquidity of the underlying contracts, our micro-sized options will enable traders of all sizes to efficiently hedge market-moving events with greater precision, and flexibility, or fine-tune their cryptocurrency market exposure, said CME Group Global Head of Equity and FX Products, Tim McCord. So, meet the newest edition, cryptocurrencies product lineup, micro Bitcoin, micro Ether options. So, very exciting. So there's more and more happening, right? A little bit more background here. The micro Ether futures contract, again, launched in 2021. So it's sized at 0.1 Ether, while the Bitcoin futures contract are sized at 0.1 Bitcoin and have been trading since May 2021. According to the CME Group, the minimum block threshold for options are 10 contracts for micro Bitcoin and 100 for micro Ethereum. So you're basically, controlling a Bitcoin then, right? If you're trading 0.1 and you basically threshold is 10 options, okay? So that's good. Genesis Global Trading, Cumberland, and Arcona Capital, okay, liquidity providers for the crypto investment vehicles. So, the Bitcoin rose more than 15%, good timing from 38,000 to 7-day high of 44,800. We've dropped down a little bit since then. That's actually something we're gonna take a really quick look at in a second. So anyway, this is just a little bit more market blah blah here. So that's my job. Anyway, this is big because not because I necessarily am eager to trade options or hold puts or or even trade short trade the futures. The reason why I'm excited about it is because the more the merrier when it comes to derivatives and especially options. Because it's really no big secret that the derivatives market and especially options market is really now, in equities, is now what actually drives the underlying. And I mean, it's absolutely huge, right? How many options are being traded in, for instance, big products like the mother of all products, right? Like the SPX, right? And even the E-mini. And, and of course, there's of course products available, options products available for, in weeklies as well, for all kinds of, on the S&P 500 for most stocks now. So it's really grown. It's grown rapidly, the options market, also since 2016 after the proliferation of more expirations, right, on weekly options. So I expect there to be more and more activity coming in the future. And why is this exciting? And let's say in the next 6 to 12 months, and as we move forward in this market. And why is this exciting? Well, because when weekly options, let me backtrack a little bit. When weekly options got introduced in, really started taking off, like when we started getting first, we had it, we always had the Friday expirations, and then we got the Wednesday, and then we got the Monday expiration, right? I think that was in August of 2016. I think it was in that sequence. And very quickly, what we found out was that this introduced an amazing amount of efficiency in the market. And by efficiency, I mean, when we're talking about standard deviation, right? And if you draw, I only have a small window, so I'm going to have to, well, I guess I could draw on this here, right? But my drawing tools. Let me see if I can launch my drawing tool. I'm not sure it's going to show up, but, worth a shot. So, okay. So, yeah, there. I hope you see this right here. The world, everything in life happens on a bell curve here, on a normal distribution. So we're having basically what we're talking about is one standard deviation. And when we're talking about like expected move, right? When you price an at the money option, right? Basically like an at the money, right? If you'd say the Bitcoin is trading at 42,000 or whatever, and then 42,000 is at the money call and the at the money put, right? And I checked it out the other day, and it was like, I think 1,700, 70 or something for the call, and I think it was 2,200, something, right, for the put. Excuse me, I'm drawing with my hand, with my mouse here. So which basically would give us a one here, there. Okay, 70. Sorry. Forgot that one here. Sorry. So basically, talk about roughly $4,000. If you're taking this together, right? If you're taking this together, to call and the put, basically it's basically a straddle, right? And if you if you count those together, you're getting very close to expected move, right? So the expected move for that week, and that was for the weekly options, by the way, for the ones expiring on Friday, was around 4,000. 4,000 was the expected move. Well, so that's kind of if you really want to know more, watch my Options 101 series in the Academy, because it'll teach you a lot about options that you might not have learned. And because I still trade options old school, the way it used to be taught back in the days when we just looked at all you had to do was a board. You didn't have a computer. Well, computers were around, but people weren't taking computers yet, and for trading. And even if there were analytical, packages out there, and people had computers, of course, sitting in the exchange, Most traders were just basically trading per the board, and there's reasons for that. But we talk about this another time. Watch my series. I've spent a lot of time talking about that in the Options 101, Options 201 series. So basically, expected move, right? What does that mean? Well, 68%, right? 68% probability of price remaining, basically 4,000 handles up and 4,000 handles down. And that's basically probability, but that's basically expectation. And how do we arrive at this expectation? Well, through the pricing of the call and the put, of course, right? It's not that it drives the other way. It's not like that some computer is calculating what expected move should be on some kind of magic formula like black skulls, right? Which almost nobody can explain anyway. And then the pricing happens. No, it happens the other way around, right? It happens the other way around. Implied volatility is a product of what the pricing of options is, and that's up to the traders, right? It's up to the market makers and the people who are supposed to pay for it. So, given that kind of basic background, let me kind of elaborate what happened after 2016, because what happened was that all of a sudden, this happened quickly in a matter of months. The market started to be extremely efficient. By efficient, you might start already suspecting what I'm referring to now. Having seen what I just presented here, is that price actually not just 68% of the time, but over 80 per our statistics, over 85% of the time remained in here. Even if you pushed outside, pushed back in, and stayed, and that's actually I have a whole options, I have a whole tutorial on that. But then like 0.3 EMs, like expected moves, in this range. But most of the time, 68% of the time, it remained inside or even very close to the expected move, right? So let's say price right now is at 42,000. So 4,000 EM, which means 4,600. Sorry, my writing is horrible. I have a pen somewhere. I just don't feel like digging it up. When I do webinars and seminars, I dig up the pen, because then otherwise, it's horrible. And that would be 3,800 here, right? There you go. It's an 8, I promise. So 3,800, 4,600, right? So that would basically be the entire range here of how price should remain this range. If it pushes it, above this range, that's quite unexpected. And a lot of times in equities market also, what that happens, it causes like a cascade. It causes a kind of runaway effect. Has to do with gamma hedging, which is way out of the scope for today. But that kind of ties into that. And a lot of times we see really big moves. So that threshold here is always very important. We watch this one with like a hawk. So knowing that, I've been trading around this concept for longest time now. And I've done very well with it, and I've built various systems on it. And what I do also with my options programs, right? If you either in foundation or if you're in unlimited, I talk about expected move all the time. It's really our bread and butter. So coming back to basically this right here, what this is going to mean is that the market is going to become a lot more efficient over time. And even if it still remains volatile, we're going to be able to assess much better, as more and more products are being adopted by traders, what is the range? How efficient is this market? Is it efficient? Do we stay with an expected move? Or is implied volatility basically at a discount? What I mean by that is, for instance, if expected move constantly gets broken, if we constantly, and within a particular market cycle, if we're pushing outside many times or more frequently than we should do it, outside expected move, what does that mean? Well, there's obviously, risk is not properly being handicapped. risk is not being properly handicapped. We don't, market, the sellers of the options are not pricing the options according to, the volatility that is, that we've experienced. So there's a discrepancy going on. That's actually an inefficient market. Or do we have a very efficient market where risk is actually, fairly accurately determined, by options activity, and are options priced accordingly? Or is it the inverse? Is it inefficient in a way that it's overpriced? And if it's overpriced, are we not moving 4,000 when we're supposed to probably, cycle around that range in that week? Is it constantly always just remaining, in a much smaller range? Because that would open up a lot of doors to potentially selling options, right? Selling a straddle, for instance, right? So this kind of things, strangle, sorry. So these kind of things that's the kind of thinking behind it. And seeing this really, really enthuses me, because I see a lot of opportunities here coming to the forefront and happening very quickly. One more thing, I've kind of been, still playing with my IVTS hacker here with, again, applied volatility. And so and I really want to show you this because it's really blew me away today. So yesterday, right, I was still playing with that. I smoothed both lines a little bit. So this is actually not IVTS. This is actually not the actual. This is a slightly smooth version. I just haven't, changed the labels. And this is a more smooth version, right? The one in, more reddish. And so, because I wanted to slow things down a little bit because it was really, really wild. Also, one comment I was talking about yesterday that was kind of weird that this was actually moving with the market, and I realized, well, I'm dividing the other way. I'm actually dividing, I'm dividing the 3 month by the 1 month, and the way our equities IVTS works, actually, you divide the 30-day by the 90-day. Divide the VIX by the VXV. So if I did this the same, it would run inverse. But I instinctively actually did it the other way around here, because I like for it to move with the market, right? It makes it a little bit more, by inversing it makes it a little bit more intuitive. So I look at this and I'm like, okay, that's kind of interesting when, whenever it pokes out a little bit, and I'm still working with the smoothing here to kind of arrive at something that I can really work. But, what I saw yesterday was this right here. And I saw this on Ethereum, especially. See that? On Ethereum. I saw that one, this big spike up, and I said, based on that, Ethereum should be pulling back, and should pull back very hard, right? And do it very soon, right? I saw that yesterday, and that's when the market was really still pushing up very high, right? And well, lo and behold, what happened? It pulled back, and it pulled back quite a bit actually. It went from yesterday, when I saw this, right, it was like a 2,950, and today it's down 2,000. Where is it? 2,869 right now, something plus minus, right? Yeah, 2,865. So yeah, I mean, it's not crashing or anything, but it's come down, and I do think that there is value to this as well, with the IVTS, implied volatility term structure, by the way, what that means. It has to do with, now let me get my pen again. You have futures contracts, right? So you have a futures contract that basically, let's say this is April, right? And it's a certain price. Let's say it's, let's assume these are just prices, right? Right. It doesn't matter what the prices are, right? And then this is May, this is June, maybe this is July, August, September, right? So basically we have all these futures contracts of a product, and that creates basically a term structure, right? Because, either it's in contango, which is this, or it's, or it's flat, which is like something like this maybe, right? So like this, sometimes it's flat, or, or it's something like this, where it's in backwardation, right? Where you actually slide down. And there's actually been some game going on, and I read about this in December that, because of the, fairly steep contango that existed in the futures market, a lot of people were playing that, right? Because, you basically just, sold backdated, You may be selling May or June, and then buying this one, and it's almost like free money. So kind of interesting, but that's basically has to do with the term structure of the futures, right? In any product like VIX futures or oil, crude oil, or some markets on backwardation, some other markets are in contango. When things got really, really serious about 2 weeks ago, the market, I'm looking here, okay, there. When things got serious, right, equities market, right, the VX futures were like this, right, it was in fairly steep backwardation. But then now we've gone back to what we've been doing for quite a while now, which is we're back in contango. And actually, a few months ago, like in December, I was really flabbergasted by the fact that it was super steep, the contango, and it has been until actually most recently. So I can usually glean a lot from all this. So not to kind of make your brain spin too much on a Sunday, but I just wanted to kind of where's my beautiful article here? Yeah, I just want to share that with you and can convey why I'm excited about this. Why I think more commodities, more options and futures, products, derivatives products on the marketplace will be very, very exciting for us, because not just if you want to trade options. And I can trade options all day long. There's a lot of great things we can do. We will do probably in the future, especially when it's more accessible, especially when it becomes more accessible, because then we're going to be able to trade it, in conjunction as well from, with what we're doing in options, and kind of cross the bridge a little bit. Because right now, RepliQuant is really, we've got kind of several columns of what we do, educational, trading options. And of course, there's crypto, right? So we're doing the masterminds and stuff, so that we have certain columns of that kind of represent the edifice of what RepliQuants represent for clientele or people interested in joining us. And I'm kind of excited, because then I'm going to be able to cross the bridge, so to say, because right now the things I do in options and the activities on the crypto side, I actually just trade, altcoins or just Bitcoin for 11 weeks or so. We've been in Bitcoin and Cryptonaissance, and it looks like we're going to be in Ethereum soon. So that's very exciting. That's actually another conversation. Maybe I should take it on since I have your attention. The hell with it, right? So I wanted to kind of make this point. I made it yesterday already, but the reason that this is exciting that Ethereum is breaking out, because it usually precedes altcoin season by like a month or two, right? And altcoin season is really when we make the big money. So again, as I said to you, if you're still on the fence, this is a great time to jump into the fray here. Even if you don't want to trade our system, fine. Stick maybe with Ethereum or use the same chart. This is the 8. Tell you right now what to do on that end if you're interested. This is the 8, this is the 21 EMA. Slap this on a chart. Trade, put it in Ethereum USD. Oh no, actually, I'm sorry, Ethereum Bitcoin. And so it started yesterday already. I ran this, by the way, yesterday when this was still up. So we basically get the signal from here. So let me show you the arrow. See that? When that signal that I just showed you, right? That was generated that day. Because this is the new candle. This is today's candle. And so we really, this backswing here, it was caught really early. Sorry to be all over the place, but just kind of share my excitement. So this puppy here really called it. I love it. Anyway, so Ethereum is a lot more volatile, and that's why the altcoin sector in general. It's why we have a sector like Total 2, right? That's everything but Bitcoin. That includes Ethereum. So it's also down a little bit today. And so, it kind of shows, Bitcoin is really kind of the gold standard. And if you're looking at Ethereum, Bitcoin, right, it's really what we're looking at in terms of, okay, are we holding Bitcoin or are we holding Ethereum? And if the Ethereum is strengthening, and if, especially when these two EMAs cross, right, and the short one pops above, than we are in business, and we basically know, okay, we're gonna hold Ethereum now. So if that's the only thing you want to do, that's very easy to follow, right? You don't have to pay us for that, maybe join us when altcoin season starts, whatever. But that's it might start soon. So if you're interested in the system, don't wait too long. But if you don't do anything else, I'm telling you, this situation here is not gonna, especially over here, Bitcoin USD. Let me move myself over here, down here. The situation, it's not gonna remain for too long. It's really coiling up, and there's going to be a big move coming. So great time to get into the system. Great time to get into the system. Great time to get into crypto in general if you're not exposed yet, or if you were planning on reloading. Not a bad spot here. Yeah, we might swing around a little bit more. There's no freaking guarantees that this won't happen, but just so you know, okay? That's pretty much all I have. I think so. In terms of Ethereum, it's exciting to see that, and clearly, the reason it being more volatile, it's always the first one. Oh yeah, that's what I was talking about. It's always the first one that moves, and I can prove that to you just by if you consider these two charts. See, you can tell, right? Bitcoin is a lot more. It's a lot less volatile, right? The spikes here much higher. This shows up a lot more actually when I don't go smooth at all. You see these huge spikes here in Ethereum. There's a lot less of that in Bitcoin. Just take my word for it. And that shows it, right? It's not just something I pull out of my butt. It is more volatile. It's always the first one to move, the first one to lose when things go down, the first one to take off when things go more bullish. So this is very valuable to see that happening. And if that maintains, right? If we continue pushing up here, we're going to be in altcoin mode. And, could be in a month, could be in 2 weeks or 3 weeks. Who knows? Depends on the strength. The retest we're getting here, that's quite normal. Yeah, that's to be expected. Nothing goes up straight up, because here, see, we have this line here. We already breached it, by the way. So if you draw a line here, where's the line again? I forgot. I always forget how to turn it on. I don't know. I always forget how to turn the freaking tools on. So never mind. But if you draw a line, oh yeah, I can actually with my own tools. What? See right here. See if you draw a line here. There's a tool for a straight line. I just forgot what it's called. We already kind of breached through that, and we're probably gonna retest a little bit, and boom. That's probably that has the high probability. So exciting times all around. I'm jazzed. I'm pumped. I'm gonna pump you up. So with crypto. So that's it. I do a whole Hans and Franz. I have a really crappy German accent for being German. That's really embarrassing. Or do I? I don't know. But that's it. That's all I really have to share for tonight. I hope it was valuable. And you don't have to pay me for the options lessons, but take it. Maybe watch it again because it's actually really good information, and it's gonna probably also change the way you look at the market, because most people don't see really the full picture. It's the only price is moving up, price is moving down, and it's bouncing here and all this. There's so much more going on behind the scenes, right? And especially if you start looking at the options market. So, and there's so much to glean from the options market. So the more that goes on in options, and the more products we see, so see me. Thank you. Awesome. I'm excited. See, I'm here, riding Ethereum into the sunset. Okay, so I'll leave you with that vision, with that image, and have yourself a nice Sunday, and I'll speak with you soon. Cheers.